The zones have shifted.
They always do, because liquidation maps aren't static. They're alive, evolving with every new position, every change in sentiment. Most traders think liquidation maps are just after-the-fact visuals. But in reality, they're signals. Signals that reveal where smart money plans its next move. This episode unpacks the updated mechanics behind liquidation maps and how to actually trade using them. How liquidation maps work. Liquidation maps visualize where traders will get wiped out. They're built using data from the liquidation engines of major exchanges, showing clusters of stop losses and high-leverage positions. Whales watch these clusters, not because they're dangerous, but because they're predictable. These zones don't just reflect trader behavior, they influence it. Whales often use them as liquidity pools, hunting for cascading liquidations or exit liquidity. How zones shift over time. Liquidation maps are dynamic. As traders enter new positions, the zones evolve. For example, when retail is overly short, clusters appear just above resistance, ideal for a short squeeze. When retail turns long, zones form below price, ideal for a breakdown trap. By comparing current maps with those from previous sessions, you can see the intent, not just the structure. Psychological warfare. Let's break this down. When whales see a dominant retail bias and liquidation levels right below, it's a setup. They might push price downward just enough to trigger liquidations, accumulate while others panic, and reverse the trend once retail is wiped. That's not theory, it's market behavior. Fake-outs, sweeps, stop hunts, these are designed, not accidental. Liquidation maps are the blueprint of this psychological warfare. How to read. Current maps. Here's what to look for when you open a map. Long liquidation clusters below price. Expect a potential sweep. Short zones above price. That's fuel for a squeeze. Funding rates and open interest confirm the bias, but maps show where it will get punished. Also note, neutral OI with strong clusters usually signals a trap setting up. Real-world example. The setup. Trap. Imagine this. Price approaches a known resistance. You see a huge short liquidation zone above it. Retail shorts pile in. Then price spikes just enough to wipe them, and quickly dumps back down. What happened? Whales ran the squeeze, offloaded into momentum, and left late longs trapped. Maps show this story in advance. If you learn to read the clusters, you see the intended path, not just the outcome. Strategic takeaways. Here's how to use liquidation maps like a pro. Don't chase moves into liquidation zones. Fade them. Combine maps with volume delta shifts, open interest flow, funding rate flips. If price approaches a zone too cleanly, assume it's bait. Simple rule. The zone that looks like a breakout is probably a trap. Bonus: how zones grow. Maps update constantly. As more traders enter high-leverage positions, clusters grow larger. That growth itself becomes the trap. Smart traders watch the zone build up, not just the trigger. When a zone gets obvious enough, whales will act. The key is timing. Bonus: Ethereum maps and Solana traps. These principles don't only apply to Bitcoin. Ethereum liquidation maps often cluster around key merge narrative levels and staking rotation zones. Solana, being more volatile, shows sharper liquidation layering, especially during short squeezes across DeFi tokens. Watch how liquidity compresses before announcements, and how price fakes out around clustered zones on alt pairs. Apply the same logic. The whales are there too. Liquidation maps aren't just tools, they're signals. Signals of intent, signals of positioning, signals of opportunity. If you want to survive, or better yet, thrive, in high volatility environments, you don't need predictions. You need a map. Decode continues next week. Let us know in the comments which altcoin clusters you want analyzed next. Subscribe for more signal-focused breakdowns in Crypto Decode.
If you see any comments promoting random coins or promising huge returns, ignore them. We never endorse projects in the comments. Stay smart, stay safe, and always do your own research.